Hello, everybody. So today I am excited to discuss ServiceNow. This video was sponsored by a channel benefactor on Patreon who will recognize themselves. And let's talk about ServiceNow because this one is an exciting stock, and I am so glad that I was asked to cover this company. First of all, let's start with the basics. Let's start with the total returns. Total returns for this company are almost twice the Nasdaq. So again, taking individual stock risk, sure, but you got to be rewarded for it. And in the case of that company, you've been handsomely rewarded, almost double the Nasdaq. It's achieved more than 30% a year in returns, 34%. Let's round it up to 35% in average annual return each year for the past 12 years. So absolutely outstanding. And this company is at an inflection point, like all of the ERP software companies right now, because of AI. And that's the chief opportunity that this company has, that we'll get to in a second. So let us talk about ServiceNow here. So it's a cloud workflow company for digital transformation. The best way that I have to describe it is that it is a ERP for IT. But saying that a company is an ERP for IT, enterprise resource planning company for IT, i.e. the software, right? The nervous system of the organization. This is the way I describe an ERP. An ERP is the nervous system of the organization. Today, organizations don't communicate through forms and through mail and employees giving phone calls and faxes to each other. No, today, companies are operated by a modern day nervous system, which is going to be an IT system. And of course, the first company that started kind of doing that was SAP, right? That was a big company. There were other players too. Oracle comes to mind. But these companies were the first ERPs. They were on-premise. They were software installed on computers. And of course, come the late 2000s, this company IPO'd in 2012. Let's say this company came of age, became somewhat ready to disrupt in 2010, 2011. It came out as a cloud ERP. This is a cloud ERP. The companies that I find the most comparable to this company would be on the customer end would be a Salesforce, and then you would have an Oracle and an SAP. This is kind of the companies that I would compare ServiceNow to. ServiceNow is perhaps one of the first cloud disruptor of the nervous system of the corporation, disruptor of the ERP of the corporation, the software that runs the business. And of course, you may tell me, there's companies that use their own legacy software, their own, it's not legacy in that case, they just use their own software to run their business. Elite corporations, take a Google, take a Tesla. These companies use their own software to run their business. A lot of legacy corporations never built their own software to run their business. They've relied on third-party software to run their business. And this is also why ServiceNow, what is so key to ServiceNow is digital transformation. Because, for example, you'll see later in the video, they sell a lot to the government, they sell to the military, etc. Well, that's obviously digital transformation, right? The military dates back from the 1700s. It's not like you can start fresh with the cloud. No, you're going to be going through digital transformation. Let me just briefly show you what they do. So, of course, this is their description, and feel free to pause the video and read it. It's kind of worded nicely. I think a better way to do it is to look at actually the individual workflows that they are processed. And so what is the workflows? The workflows, it's these forms, it's these inputs, these buttons, these forms that you send, all of these things that you click to either get problems resolved, either get things done. And for you to understand how this company got started, it got started with IT tickets. You got a problem with your IT, you want to get a new software installed on your laptop, you open a ticket with IT. That company got started operating these tickets. So that's the ticket workflow, right? You have your workflow. Right? Employee sends the ticket. Then, IT engineer reviews the ticket, then places a resolution on the ticket, then lets the employee know what to do, and then resolves the ticket. Like all of these workflows, these are all workflows. And there's a lot of them in a company for dealing with whatever your back office wants to do. And this is everything that they have. To the best of my understanding, they have 4,000 different workflows that they covered with, pre-created, pre-existing apps. And so it goes way more today than just your IT ticket, right? They do HR, right? So you have a little bit of competition with Workday here, with like onboarding, legal service, workplace services. Of course, they do IT. That's the legacy business. IT asset management, right? When do you change the laptop, etc. Digital end user experience, portfolio management, IT operations, service management, and they do other things. Like they started, competing a little bit against what, say, a Bill.com would do with accounts payable and sending invoices and getting invoices and doing fines. Suppliers, dealing with suppliers, dealing with the sales and orders, the industry solution, customer service management, right? This is right playing into what Salesforce is doing. So you can see they're attacking at all sorts of different angles. They are trying to disrupt the back office and the middle office with these forms that run the company, the nervous system of the company. You have the nerve and you have two ends of the nerve, with the employee on the one end and another employee on the other end, or the employee on the one end and a customer or supplier on the other end. And of course, fast forward 5 to 10 years from now, my guess is that it's going to be AI chatbots. It's going to be just AI talking to other AIs, talking to other AIs. And this is why these companies are so hot right now. This is why a lot of these companies are investing, tripling down into AI, because the very solution, of course, is that when you have an IT ticket, you're not dealing with an AI. You're not dealing with an engineer on the other side. You're not dealing with a specialist on the other side, an HR specialist or whatever. You're dealing with an AI, and that's the big power. And you'll see they've gotten into a big step. So imagine how much value these companies can unlock for these legacy corporations. It's insane. You can install that stuff. You fire the entire IT staff. You fire the entire HR staff. Well, you don't fire the whole thing, but a bunch of it, right? Because you just replace it. Think about what that means. You may have dealt with that, with a lot of this, customer issues, customer tickets. Yeah, as a customer, sometimes you have an issue with your phone plan on whatever, right? And you may be talking with the person on the other side trying to say, oh, I want to get a discount on my phone plan. Well, you're going to fast forward, and it's already being implemented today, but fast forward, 2 to 3 years from now, you're just going to be dealing with an AI. You're not going to be dealing with a person anymore on the other end. And think about how much value that's going to unlock. ServiceNow, in my view, is going to unlock a lot of that value. A lot of the companies will be driven by AI, and they are at the heart of this, and that's why. And you'll see all of these stocks at the end of the video. All of these stocks have spiked. I don't know if you can see on my total return generator here. This stock has been spiking for the past 6 months because of that opportunity of literally automating the entire workflows of the business. Automating the workflows of the business. Think about that. Agents talking to agents. Wonderful. This is just nuts, in my view. So anyways, if you want to see what an exponential growth curve looks like, well, let me put it forward. This is what this looks like. Each customer cohort spends more, and of course, each year you acquire a new customer cohort, and this is the growth in volume. Of course, each cohort has a little bit of exponentiality to it because they add more products, but because they also grow the cohorts each time, you get with the beginning of an adoption curve, right? The beginning of an exponential curve here, and it's just beautiful. The only company where I've seen something as beautiful, well, there's a few of them, but one of them that comes to mind when I see this that has just as beautiful of an expansion growth curve like this is Nubank. If you look at Nubank, they have something very, very, very similar, growing as fast. There's a few more, but again, that's the power of this type of companies. Of course, they do not communicate on the satisfaction rate of the customers, but they use the renewal rate. So instead of like using the net promoter score, etc., like they would do in a consumer-facing company. So they don't use net promoter, but they tell us renewal rate 98%. People are nearly 100% satisfied. This is a 21st century business. When you talk to people let's use a customer facing company. Why is Amazon, in my view, so safe? Why do I not think Amazon's going to be disrupted? Because when you ask people, would you recommend Amazon to a friend, 98% says, oh yeah, I would definitely recommend Amazon to my friend, right? Would you recommend an iPhone to your buddy? Oh yeah, you would definitely recommend iPhone to your buddy. This is like the change in these corporations that are so aligned with their customers, that their customers are so into them. You see, 98%. This is stunning in my view. This is great. Also, let's look at the rule of 50. On my channel, I care about the rule of 40. And, based on the rule of 40, frankly, Adobe, Salesforce, and Workday, I'd be very careful with Adobe. I would be very careful with Adobe. Some of that disruption from generative AI, I see it coming so big. So put Adobe aside, but whether it's Salesforce or Workday in my framework, I would be very kind to these companies. 38% and 42% on rule of 40. It's got my stamp of approval. You got rule of 40. You're doing great. They're doing 54. It's high. Of course, for the stocks I cover on the channel, I have some that get much higher than that. I even have some stocks in my spreadsheets that are above the rule of 100. Rule of 100. Think about that. But for the size of that company, keep in mind this is nearly a $200 billion company in market cap. For that size, this is pretty stunning. Good for them. They've been growing strong and they keep growing. The total addressable market, 275 billions. Of course, this is what they mean here is yearly sales, 275 billion in yearly sales. What they capture, you'll see in the revenue, they capture about 12% of that right now. So and that, of course, that total addressable market, of course, is going to grow tremendously within the coming years, right? We're not, on this channel, we don't invest for 2026. In this channel, we buy a stock for the next 10 years. So this is great in my view. And you can see all of the workloads that and it really depends, right? It's something that they either are trying to disrupt or they can bring in. This is a company that allows you to either build on top of an SAP or replace a lot of the processes offered by SAP. In that way, it works a little bit like a Palantir. You can use Palantir for everything you want to do for these companies that are at the edge in specific industries, or you can also build and also mix and match. And we know this is something companies like to do. Companies like to have multiple partners, multiple software companies helping them because it helps them retain control. It helps them negotiate prices. There's a bunch of reasons why that is, but you can see that ERP of IT, which in my view, IT is the company, period. That ERP is getting very powerful in my view. So, is ServiceNow going to replace the back office with AI? This is the key question of making this video. IT service tickets, what they got started with, a big business of its own, on its own, it's a big business. Treated by generative AI. Think about how much faster generative AI would be than an agent sometimes on the other side of the world. It would be so much time better. This is why some companies, for example, Teleperformance is like a company, for example, that's got really hurt by that. A lot of these customer service companies, got really hurt by that. I'd be curious to see if and or our Indian company Infosys, for example, is doing on that, because they do a lot of that stuff. So that's one aspect. HR and onboarding. This would be one of the reasons, for example, where I would be very careful investing in a company like Workday. As much and as popular as Workday is, I'm always worried that some of these juggernauts would be able to provide more company-specific, highly tailored, low-code to no-code solutions that are just created by a few people in HR, and you replace a giant HR operation into a much smaller, much leaner operation that uses a bunch of AIs to do things like, HR onboarding, HR specialists. You replace your specialists by AI, and you create a lot of value. And the same is true for customers, right? And of course, Salesforce is a leader for a lot of products that are B2C, right? Business to customer. Salesforce is the leader. But when it comes to B2B, Oftentimes, you don't need as powerful of an ERP that's customer facing if you only have just a few customers, or even if you have essentially no customers because you cater a mission that doesn't require necessarily a customer, right? That would be, an example is if you're say the military, for example. There's one customer. If you just have one person to whom you're answering, then you don't necessarily need to deal with that. B2B businesses that cater to very few customers, sometimes they don't necessarily need a customer-facing app. Anyways, I'm rambling here. Let me show you a little bit how they're showing this and how this works. And I could not agree more with the issues of today. Is that, you have a customer that contacts, customer has a problem, or employee has a problem, or employee doesn't understand how to get a new laptop or how to get to orientation or whatever. So you have a stakeholder of some kind who has a question, right? And then you have a frontline agent today. This is going to be replaced by AI. But for this to be efficient and replaced by AI, you need to have all of the different functions of the organization, which are also AIs and also talking to each other. And I love the term they used. First of all, the key term in business the past 10 years has been silo. So all of these are silo, right? Legal has created a custom tool. Sales has created a custom tool. Invoicing, marketing, they all have custom tools and they don't communicate. So you can take down this barrier with an ERP IT system like a ServiceNow. You take down all of these barriers and you move everything into the cloud. And then, of course, once you've taken down this barrier, you don't have a human middleware. You have an IT middleware where the AI can communicate and figure out on its own all of the different issues, and you remove a lot of bloat that you have in old corporations by doing that, and then that leads to excellent customer service, and I find that truly amazing in my view. Another thing is, of course, they define themselves as a platform. Why are they a platform? Because, like I said, they have 4,000 different processes they can handle. It's not just your HR ticket or your IT ticket, and they specialize within different industries, etc. So they're a platform where you can kind of pick and choose which tool you want to use. Do you want to use a customer service ticket? Do you want to use IT? Do you want to do legal, invoicing, billing, whatever, contracts? You can do that. But look at what they're moving into too, which I wish they had emphasized a little more in their investor presentation. They're moving into operational technology. So are you going to be able to connect your manufacturing, your industry, your robots? They're clearly showing here a more of a legacy robot, car manufacturing type of robot. Are you going to be able to directly detect, say, the problems that you have on a manufacturing line without having to go from, say, manager uses IT ticket to figure out why the efficiency is not very high in the physical plant, to AI directly connecting into the robots and figuring out that robot number 37 is from a generation from 5 years ago and it needs to be replaced with a new robot than another generative AI found online, and you can just trigger that without any humans in the loop, without the human middleware. You just move to a fully IT nervous system. And I realize it sounds out there. Back in the early days of the channel, I was covering a little more IT. It sounded even more out there now when you talk about it like that. Today, Today, it's very real and it's very acceptable to imagine two AIs, three AIs, a bunch of AIs just dealing with different functions of the organizations together. And humans, the main humans that are going to remain in the organization, in my view, they're going to be experts, and they're going to be polymaths. I'm going to reuse an old word, right? They're going to be polymaths. Experts at multiple things. So kind of like a super generalist is kind of my view of where work is headed, where not only do you have to be a generalist, but you have to be super good at so many different things in order to stay relevant within organizations. Organizations are going to get more and more and more and more elite. I have little doubt about that. And the employee is the most expensive resource, and therefore their skills need to be used towards the highest value-added components. I'll get to that in a second, and you'll see why. So again, ServiceNow, they have an open AI infrastructure. AI is essential to understanding the future in ServiceNow in my view, and they are themselves developing some models with different training models, and they use NVIDIA, for example. And so they're going to have chatbots and different generative AI models for their 4,000 different forms that I told you about that they've digitalized. They're probably going to have a bunch of AIs for all of these, and you'll see in a second they started development. But companies will be also able to set up their own generative AIs. And by the way, if you watch this, ask yourself: do you use AI in your daily workflow? I force myself to use AI nowadays, right? I added AIs as friends on WhatsApp, and I talk to AIs, and I think a lot of us should do that, right? The ChatGPT website and app is also installed in my devices, and I try to force myself to talk to AI, and these companies, they're moving at a very fast speed, and AIs are getting better and better and better. And this is an example of an AI, right, which they call my bot, but each company will call it whatever they want. They'll probably give them a fake human name of some kind. And this is an example of an interaction, say, where, say, you have a customer and they want to switch to the new iPhone, and instead of having to go to the store, right? The store is gone. Let's say you're AT&T, you go to the store to upgrade to the new iPhone. That's legacy. That's gone. Today it should all be digital. And you don't talk to a human, you talk to a bot. And you're like, hey, yeah, I want to get a new phone. And you talk to the AI, and the AI is going to help you order the new phone. And probably the AI is going to be able to negotiate. And probably the AI is going to be a much negotiator than the human, and may be able to, hold more firm on the pricing and things like that. This is going to create so many interesting things. Would you like to order on your iPhone, and you talk about that with the AI, and think about all of the different company interactions: employee to employee, employee to customer, employee to supplier, supplier to employee, supplier to customer, not really, but you know what I mean. Like all of these interactions, you're going to have AI mediating these interactions and making them ever more efficient. Let me move on with an example. So this is an example of a new employee, right, that joins a company. That's a new manager for a company, and you can see the AI is boosting the efficiency of the employee. So, for example, here, this is an example of an employee. The AI is saying, "Hey, this is a good time for you to lead to the office and join orientation. Here's your digital badge. Why don't you leave now?" The AI is kind of boosting the employee to move fast, right? But it doesn't stop there, It helps you. It helps you answers. You're an IT manager. She's asking, "Oh, can you set appointments for me next week?" And yeah, the AI is like, "Yeah, I'm gonna set it for you." And the AI is explaining to her how works at that company, how people work. But this is even more fascinating. So, sometimes employees, they have some idle time. You may have heard things like the stealth quitting or the quiet quitting generation, and, TikTok, or you see all of that. It makes the job of an employee stressful, if you ask me. But nonetheless, that's the story of the world, and that's the story of productivity. An employee today, if you work for a company, you're likely much more productive than your peer 50 years ago. Your peer 50 years ago was probably way less productive than the employee today, and it's actually a fact. Take any company, take revenue, divide that revenue by how many employees work at that company, and you'll see that today at elite organizations, it's not uncommon to have employees earn between $2 and $10 million of revenue per employee, right? And of course, you pay the employee $100,000. Do that for Walmart. You notice that the revenue per employee at Walmart barely breaks $200,000. So you're not doing a 100x on employee time. Elite corporations today, they do 100x on employee time, because you may pay an employee $250,000, but when you divide revenue by how many employees there are, you realize each employee earns you like $8 million in terms of revenue. So that's productivity. Employees are much more productive than ever. But this is part of this, So for example, the AI is like, hey, orientation is in 15 minutes. Instead of being idle and being on TikTok or whatever, or texting your friends for the next 15 minutes because you can't start a project, I've started editing this. Why don't you want to send an email to your team? And the AI already wrote the email and is suggesting that you write the email. So the AI is finding you tasks to do in your idle time. And of course, this is going back to HR stuff. Some employees are gonna love it, right? If you may remember, like the old stuff from back in the day, Type A, Type B. Some employees are gonna love it. Like Type A employees, they're totally gonna love this. Some employees are absolutely going to hate it. But that's the way of the world. That's the way of the world. How do you feel about AI today? If you use Outlook at work, which by the way, 100 million enterprises use that. How do you feel about AI correcting how you speak and telling you should speak differently? You should make that sentence more concise. Some employees love it and don't fight it. Others hate it. So this is just the way of the world. We can't, we can't go against it, right? So anyways, these companies, and I'm putting ServiceNow in there, but other companies that are leveraging AI, they're going to unlock tremendous profitability in the future. And this is why AI is not a fad. This is why companies like NVIDIA, for example, are trading where they're trading. AI is not a fad, in my view. We're going to unlock so much productivity. The future is going to be very bright, if you ask me. Let's get back to being down to earth. Down to earth and looking at what's good about this business. First of all, they are growing international and there's markets that they don't have. I want to call your attention to the biggest country in the world in terms of people, India, right? It's a new market for them. They don't have that market. It's a new market. Brazil, which is a mini United States, if you ask me, 240 million, they don't have that market. A lot of Asian countries they need to get to, right? Saudi Arabia, a very big country. Mexico is 150 million people. These are major markets, and of course, they have more mature European markets. But I can tell you, and Japan is kind of like the Asian Europe in a way. These markets, obviously, the quote unquote, I don't really know. I'm going to call them the developed markets because that's what we call them. But these markets, just like the US, they're more mature. They're more mature. Of course, everybody goes towards the European markets and towards the Americas because they're more mature. But this is where the growth is at. So like India, and of course, there's always the issue of China. Can a company like that get into China? Probably not, but they have a lot of international expansion, is the point I'm trying to make. So that's point number one. They have a lot of international expansion. India is often one that often comes back. Like, for example, I'm a Tesla investor. If Tesla goes to India, that's going to be absolutely insane, right? So these are major markets where you can literally double your size. Okay, let's talk about customer cohort. We talked about this before. It's growing very fast. This is excellent. Let's talk about renewal rate. We talked about this before. It's 98%. So the customers are very happy. Let's talk about how they sell. So a lot of to sell to a lot of these big companies, you gotta go from distributors sometimes, and so they have some of the classics. Accenture, a company that's not doing very well right now, but all of these advising offices, in a way, I'm going to call them like that, they may recommend and sell some of the service. Now, they have the hyperscaler, big scale, and then they have other resellers that are specializing in selling software. So they have that done. Federal government, of course, who's the biggest spender in the world? Who's the biggest customer of the world? The biggest customer of the world is the U.S. government, and they are catering to the U.S. government. So that's obviously a huge market of its own. Look at an S&P 500 map. The defense sector, you have a whole part of S&P 500 which is just linked to government spending. So government spending may be, the U.S. government may be the equivalent of one of the major European countries in terms of market size, right? It could be the equivalent of France in terms of market size or something. So that's how much money they spend, right? 7 trillion. is the numbers. As unfortunately, as a macro enthusiast, unfortunately, I know that number, and that's where the deficit comes from. Let's look at the growth. The growth has been stellar. If you look at the growth, let me bring this to front. If you look at the growth, it's beautiful. It's just a beautiful exponential. We don't have a single down year. This is not like a business that's really hurt by interest rates, where you see a major down year for so many of the businesses I follow on the channel, where by interest rate or trends, you don't have that with that. This is a stellar, highly predictable company. And as you may have guessed, this is going to show in the valuation. It's a premium company. So let me make a few points. First point, which I love, is we have 2 years out guidance, but when they gave us this, that was actually 3 years out guidance. So as we near 2026, I think we're likely going to have another 3 years of guidance. And so imagine this is a company that grows at 20% for the past 6 or 7 years. Well, 15% for 5 years, 15% sequential growth each year for 5 years, that's a doubling, right? So actually at 20% growth in 3 years, you're near a doubling. You're almost at a doubling. These growth rates, when they compound, that's a very powerful machine. And so this company can grow much more. Now, I want to call your attention to companies like Salesforce, companies like SAP, right? The big legacy player in that sector, and companies like ServiceNow, of course. And when I call your attention to these companies, what do you see? Well, they all saw a spike in their stock price over the past year. Why? Because a lot of people are seeing the opportunity of AI, seeing this opportunity of automation. They already have a customer who are going to be selling those agents. Those agents are going to be sold by these companies who already have the customers. Hence, the big spike in sales price. And SAP got very lucky about this, right? That's like a big luck for SAP on this one, because before AI, they had to reinvigorate their growth. The growth wasn't there, and amazing turnaround from a European company right there. German company, love it very much. We'll see how it goes. SAP is still the legacy player. If you've ever used Concur at work, you know what I mean. Anyways, okay. So let's look at the peers, or what I would call the peers, and I only have 3 peers in there in my view, and I know they're slightly different, but in my view they're comparable companies. And so ServiceNow, Salesforce, and SAP, and the best out here in my view is ServiceNow. Because of the rule of 53, because that's outstanding. CRM is Salesforce is pretty close to a rule of 40, so I'll grant them that. They're pretty close. SAP is not. SAP is not that close. But look at the EBITDA margin. EBITDA margin is much higher for ServiceNow. This is logical. This is logical. CRM was early 2000s. SAP, much older company. ServiceNow, early 2010s. The lean and mean company in ERP is the newer company who doesn't have that bloat, and that's not surprising to me. And they're growing twice as fast, which means give it 5 years, and the revenue of ServiceNow will likely outweigh the revenue of CRM and SAP, despite them also growing their revenue. This is just what happens with durable growth, and on an EV over GP over RG basis. Okay, they're a little more expensive than CRM, and that's fair. I don't see any issues with CRM's valuation either. I think both companies are fairly valued. I think SAP is very expensive here. I would not buy SAP at this price. I think SAP is very expensive. It got a little bit of hype. Is the growth going to double all of a sudden? I don't think so. So in conclusion, now out of the playbook of implementing GenAI into your ERPs, the best play in my view, probably now. I agree with the channel benefactor. I fully agree on that one. So let's talk about the numbers. We have 2 years out outlook. So that's I've talked about this. This is good. This is from a prior slide. Let me just talk about this. Okay, so let's look at the performance, and it's good to go back into history. So ServiceNow, past 12 years, 34%, as I mentioned at the beginning of the video. Salesforce, 18%. So again, your company. And then SAP, you are well below the Nasdaq at SAP at a 13%. You're more in line with S&P 500. This is all logical. This is investing for you. This is all logical. The legacy older company, they tend to just not grow as fast. Special mention here for Oracle, which I didn't really cover, but I could have put Oracle in that analysis. Oracle is growing kind of in between SAP and CRM, again, a much bigger company. So the lean and mean company that came out of nowhere and is kind of like, taking business from all these legacy players. CRM is not really a legacy player, but that's ServiceNow. That's ServiceNow, and so it explains why it's a very liked business, but also this story, this ERP story, is well understood by the institutional investor, and the institutional investor tends to price up these stories quite a bit. So again, Now would be my pick. I don't own Now, because I see a lot of great stories in other fields, and you gotta pick that opportunity cost. And I'll conclude this video with one point to think about. Just one small point to think about is, and this is the Palantir thesis, is will AI make it easier for companies to rebuild their entire IT? Will companies be able to just entirely rebuild their IT from scratch with AI? And I think that's a hopeful thing to say. I think a lot of companies are very cozy outsourcing their AI to companies like this, and then the profits will flow to companies like this. But there's a reason why elite companies like to use their own homegrown software, and it's that reason. A lot of the profit centers from these companies are flowing to AI, right? And when you see some companies of ServiceNow, like in banking, etc., you really see the profits flow to the more AI, the leaner, the IT tech companies. That's why Silicon Valley is so huge. That's just the way it is. So anyways, thank you so much to the sponsor of the channel benefactor, who requested this video. This video would not be possible without them. So thank you so much, and they will recognize themselves. My Patreon, again, I launched it 3 days ago. I'm grateful for anybody who has subscribed. Thank you so much. This is making these videos possible. I hope you really enjoyed my analysis. I spent quite a bit of time looking at this stock, and I'm happy I learned a lot about it. These AI stuff, they're going to be stunning. This AI is going to create a lot of value. AI is not a fad. NVIDIA, right? I think it's going to keep doing very well. Anyways, this was no investment advice, not investment advice, no financial advice, just entertainment. Please like, please subscribe. Thank you so much for watching, and have a wonderful day. Thank you.